Here is a summary of the Datadog Q3 2025 earnings call transcript, designed for clear and concise reading aloud. Datadog Q3 2025 earnings call summary. Good morning, and thank you for joining us for Datadog's third quarter 2025 earnings call. Today, we'll review the company's financial performance, future outlook, and key business drivers. Financial highlights for Q3 2025. Datadog reported a very strong third quarter. Revenue reached $886 million, an increase of 28% year-over-year, exceeding the high end of our guidance. Customers. We ended the quarter with approximately 32,000 customers, up from 29,200 a year ago. Large customers. The number of customers with an annual recurring revenue, ARR, of $100,000 or more grew to 4,060, up from 3,490 a year ago. These larger customers now account for 89% of our ARR. Free cash flow generated $214 million in free cash flow, with a free cash flow margin of 24%. Gross margin stood at a healthy 81.2%, a slight improvement year-over-year. Operating margin achieved a 23% operating margin. Key business drivers and performance. The business continues to benefit from strong underlying trends in cloud migration and digital transformation. Broad-based demand. We observed positive trends across the board. Notably, we saw an acceleration in year-over-year revenue growth for our non-AI customers. The sequential usage growth from existing non-AI customers was the highest in 12 quarters. Platform adoption. Customers are increasingly adopting more products on the Datadog platform. 84% of customers now use 2 or more products, and 54% use 4 or more. This platform strategy continues to resonate strongly. AI customer growth. AI-native customers also demonstrated strong revenue growth, with an acceleration in Q3, even excluding our largest AI customer. New business momentum. New logo bookings and revenue contribution from new customers increased significantly. Retention. Churn remains low, with gross revenue retention stable in the mid to high 90s, underscoring the mission-critical nature of our platform. Product updates and momentum. Digital experience. Our digital experience products, including REM, synthetics, and product analytics, now exceed $300 million in ARR. Datadog was once again recognized as a leader in the Gartner Magic Quadrant for digital experience monitoring. Security suite. Security ARR growth accelerated to the mid-50s year-over-year, up from the mid-40s last quarter. We're seeing growing success with Cloud SIEM and positive trends across our security offerings. AI innovations. We continue to execute on our ambitious AI roadmap. Bits AI agents. Customer interest in our Bits AI agents is high, with thousands on board for preview. Feedback highlights significant time and cost savings. LLM observability. We launched LLM experiments and playgrounds, and custom LLM for judgment evaluations. The number of LLM span customers has quadrupled recently. MCP servers. Our MCP server is seeing strong adoption, acting as a bridge to AI agents and further embedding Datadog into customer workflows. AI data ingestion. Over 5,000 customers are now sending AI data to one or more of our AI integrations. Integrations. We now support over 1,000 integrations, a market-leading number, enabling customers to correlate diverse data sources. Notable customer wins and expansions. We secured several significant seven-figure annualized deals, including a leading European telco, our largest ever land deal in Europe, displacing over 10 tools and expected to save over $1 million annually in tool costs. A leading financial risk and analytics company, replacing 14 tools and starting with 11 Datadog products, including Cloud SIEM and Bits AI. A Fortune 500 technology hardware company, selecting Datadog as their strategic observability partner and displacing commercial tools. A Fortune 500 financial services company expanding to 15 Datadog products and replacing their SIEM with Datadog Cloud SIEM. We also saw a 9-figure annualized expansion with a leading AI company, reflecting strong long-term partnership and early renewal. Management's outlook and forward-looking statements. Long-term drivers. Digital transformation and cloud migration remain key secular growth drivers. AI opportunity. We are incredibly excited about the rapidly growing market opportunity in AI, where we are building a comprehensive suite of AI observability products and embedding AI into Datadog itself. Q4 2025 guidance. Revenue: $912 million to $916 million, 24% year-over-year growth. Non-GAAP operating income: $216 million to $220 million, 24% operating margin. Non-GAAP net income per share: 54 cents to 56 cents. Full year 2025 guidance. Revenue: $3.386 billion to $3.390 billion, 26% year-over-year growth. Non-GAAP operating income: $754 million to $758 million, 22% operating margin. Non-GAAP net income per share: $2 to $2.02. CEO statements. Olivier Pommel. We have seen broad-based positive trends in the demand environment, with ongoing strength in cloud migration and digital transformation. As a notable inflection, we saw acceleration of year-over-year revenue growth across our non-AI customers, and the sequential usage growth for non-AI existing customers was the highest we have seen going back 12 quarters. Our platform strategy continues to resonate in the market. At the end of Q3, 84% of customers were using 2 or more products. 31% of our customers were using 6 or more products. Regarding Bits AI, we see the potential here for our agents to radically transform observability and operations. On the long-term outlook, there is no change to our overall view that digital transformation and cloud migration are long-term secular growth drivers of our business. Meanwhile, we are advancing rapidly in AI, where we are incredibly excited about our opportunities. CFO statements. David Obstler. Our Q3 revenue was $886 million, up 28% year-over-year, and up 7% quarter-over-quarter. Overall, we saw sequential usage growth from existing customers in Q3 that was higher than our expectations and the strongest in 12 quarters in our non-AI native customer base. New logo annualized bookings more than doubled year-over-year and set a new record driven by an increase in average new logo land size, particularly in enterprise. Our Q3 operating income was $207 million for a 23% operating margin compared to 20% last quarter and 25% in the year-ago quarter. We are pleased with our execution in Q3. We are well positioned to assist our existing and prospective customers with cloud migration and digital transformation journeys, including AI adoption. Significant risk. Factors mentioned, implicitly or explicitly forward-looking statements. The transcript emphasizes that statements made are subject to risks and uncertainties that could cause actual results to differ materially. Referencing Form 10-Q for details. Competition. While not explicitly detailed as a risk in this excerpt, the discussion of new product integrations and market leadership implies a competitive landscape. AI adoption pace. The company is heavily investing in AI, and its future success is tied to the pace and depth of AI adoption by its customers. Customer concentration. While expanding, the continued reliance on large customers for a significant portion of ARR, 89%, represents a degree of concentration risk. Macroeconomic conditions. While not a primary focus, general economic conditions can impact IT spending and thus Datadog's growth. Lowlights, not explicitly stated, but can be inferred from context. GPU monetization. The CEO acknowledged that current revenue is not yet significantly capitalizing on GPU monitoring, indicating this is a future opportunity. Net retention rate, NRR. While strong at 120%, the NRR did not show significant upward pressure, which the CFO attributed to its trailing 12-month nature and rounding. Key takeaways. Datadog delivered a robust quarter driven by broad-based customer adoption, accelerated growth in its non-AI segment, and strong new business acquisition. The company is successfully executing on its platform strategy and is well-positioned to capitalize on the growing opportunities in AI. Management expressed confidence in future growth, supported by investments in R&D and sales capacity, and provided guidance for Q4 and the full fiscal year 2025. Thank you.